Hello, beautiful humans curious about money. I'm Erin Lowry, your trusted Broke Millennial, and welcome to my little corner of the internet where we're going to unpack something big. My book, Broke Millennial Takes on Investing, which came out in 2019. Today we're going to talk about something that gives many people a headache, but that can be easier than it seems. Investing. Yes, investing. I know it can sound intimidating, like something only rich and famous people do. But let me tell you something. That's a myth. Investing is for everyone, even for those who are just starting to manage their money. It doesn't matter if you earn a lot or a little, the important thing is to start building your financial future. In this essay, we're going to demystify the world of investing, and I'm going to give you the tools so you can start investing with confidence. We're going to become finance experts together. Are you ready to start growing your money? Let's go. Investing isn't just for millionaires. Many people think that to invest, you need to be a millionaire, have a personal financial advisor, and understand a bunch of complicated terms. But that's not true. Nowadays, there are many ways to invest with little money and learn as you go. It's like when we start going to the gym, right? At first, we don't know how to use all the machines or lift a lot of weight. But over time, we learn, gain confidence, and increase the intensity. The same thing happens with investing. The important thing is to start small, with amounts that make you feel comfortable. It's not about getting rich overnight, but about building a solid foundation for the future. Step by step, you'll go far. Decoding the language of finance. Stocks, bonds, and mutual funds. Before we start investing, it's important to understand some basic terms. Don't worry, it's not rocket science. Stocks. Imagine a stock is like a small piece of a company. When you buy a stock, you become an owner of a small part of that company. If the company does well, the value of your stock goes up, and you make money. But if it does poorly, the value can go down. Bonds. Bonds are like loans you make to a government or a company. In return, they pay you interest for a specific amount of time. They are a less risky option than stocks, but they also usually generate less profit. Mutual funds. A mutual fund is like a basket where different investments are grouped together, like stocks and bonds. This way, you diversify your money and reduce risk. It's like having a little bit of everything so you don't put all your eggs in one basket. Section 4. Goodbye fears, hello future. How to invest with student loans. I know many millennials are worried about their student loans, and for good reason. It's hard to think about investing when we have loans to pay off. But don't worry, there are options for you too. First, make sure you're paying your debts on time and as efficiently as possible. If you have a steady job, you can start investing small amounts of money each month. Even if it's just $50 or $100, every little bit helps. Remember that investing is a long-term game. Don't get discouraged if you don't see results immediately. The important thing is to be consistent and disciplined with your savings and investments. You'll see how, over time, your money will start to grow. Section 5. Technology is your friend exploring robo-advisors. In the digital age, there are tools that make investing easier than ever. One of these tools are robo-advisors, online platforms that help you create and manage your investment portfolio automatically. Robo-advisors work with algorithms that analyze your risk profile, your financial goals, and recommend the best investments for you. Plus, they usually have lower fees than traditional financial advisors. If you're just starting out in the world of investing, robo-advisors can be an excellent option. They allow you to invest simply, safely, and without needing to be a financial expert. It's like having a financial advisor in the palm of your hand. Section 6. Invest in what you believe in. Quick guide to socially responsible investing. Did you know you can also invest in companies that share your values? Socially responsible investing, or SRI, lets you support companies that care about the environment, human rights, and social justice. To find socially responsible companies, you can research online or use investment platforms specializing in SRI. There are many options to align your investments with your beliefs. Section 7. Let's get started. Small steps for big investments. It's go time. If you're ready to start investing, here are some tips to take that first step. 1. Set a budget. Before investing, it's essential to have a clear budget that lets you save money each month. 2. Define your goals. Why do you want to invest? To buy a house? For your retirement? Having clear goals will help you stay focused. 3. Choose a strategy. Are you going to invest in stocks, bonds, or mutual funds? Will you use a robo-advisor? Research the options and choose the one that best fits your profile. 4. Start small. You don't need to invest large sums of money at first. You can start with small amounts and gradually increase them as you get more comfortable. 5. Be patient and consistent. Investing is a marathon, not a sprint. Don't get discouraged if you don't see results overnight. The important thing is to be consistent and disciplined with your savings and investments. And remember, don't be afraid to ask for help if you need it. There are many resources available like financial advisors, financial education platforms, and of course, your friends and family. Take the first step towards a more solid financial future. You can do it. In this section, we'll explore how to diversify your investment portfolio to minimize risks and maximize profits. Diversification is a key strategy that can help you protect your money and ensure more stable growth over time. First, what is diversification? Basically, it's about not putting all your eggs in one basket. By investing in a variety of assets, like stocks, bonds, real estate, and more, you can reduce the impact that one bad investment could have on your total portfolio. Why is it important to diversify? Because no investment is completely safe. Markets can be volatile and sometimes unpredictable. By diversifying, you spread the risk, which can help you avoid big losses. How can you start diversifying your portfolio? Here are some practical steps. 1. Don't invest all your money in just one type of industry. For example, if you invest in technology, consider also investing in healthcare, energy, or real estate. 1. In addition to stocks, consider bonds, mutual funds, ETFs, and even real estate. Each type of asset has its own level of risk and return. 1. These are excellent tools for diversifying because they contain a mix of different assets. They are easy to manage and often have lower costs. 1. Diversification isn't a one-time activity. Review your portfolio at least once a year to make sure it's still aligned with your goals and risk tolerance. Remember, diversification doesn't guarantee profits or completely protect against losses, but it's a fundamental strategy for any smart investor. With patience and a well-diversified strategy, you'll be on a safer path toward your financial goals. So go ahead, diversify, and maximize your chances of success in the world of investing. Now, let's talk about real estate investing. We'll look at the advantages and disadvantages of investing in properties and how you can start investing in real estate with little money. First, let's talk about the advantages of real estate investing. One of the biggest advantages is generating passive income. By renting out a property, you can get a steady flow of money each month, which is great for adding to your income. Also, properties tend to go up in value over time, which means your investment can grow in the long run. Another advantage is diversification. As we mentioned before, diversifying your portfolio is key to lowering risk. Investing in real estate lets you have a different kind of asset, which can protect you from ups and downs in other markets, like the stock market. However, there are also disadvantages you should think about. Real estate investing needs a big upfront investment, and maintenance costs can be high. Also, managing a property can be a lot of work and takes time, especially if you have several properties. So, how can you start investing in real estate with little money? Here are a few options. 1. REITs. REITs let you invest in real estate without having to buy a physical property. You can buy shares of these funds, which invest in a variety of commercial and residential properties. 2. Crowdfunding. Crowdfunding platforms let you invest small amounts of money in real estate projects. This gives you the chance to spread out your investment without needing a lot of money up front. 3. Look for deals. Look for opportunities in up-and-coming markets or properties that need fixing up. These can offer a more affordable entry point and potential for growth over time. 4. Lending. You can invest in real estate by lending money to other investors. This lets you earn interest on your investment without having to manage a property. Remember, like any investment, it's important to do your own research and think about your financial goals before investing in real estate. With the right plan, you can take advantage of the benefits of this type of investment and add a new piece to your diversified portfolio. Go for it, and good luck on your real estate investing journey. To wrap things up, let's talk about the importance of staying informed and educated about market trends. In the world of investing, knowledge is power. It doesn't matter if you're a new investor or a seasoned pro, there's always something new to learn and apply. First, subscribe to trustworthy financial newsletters and blogs. These sources can give you daily market updates, expert analysis, and practical tips. Platforms like Morningstar, Investopedia, and The Motley Fool are great places to start. Also, think about joining online forums and communities. Places like Reddit, in subreddits like Our Investing, and Facebook groups can be helpful for discussing strategies and getting different perspectives. Always remember to check the credibility of the information you find. Another valuable tool is podcasts and YouTube channels dedicated to financial education. Shows like The Dave Ramsey Show, Bigger Pockets, and Graham Stephan can offer practical advice and real-time market analysis. Don't underestimate the power of online courses. Platforms like Coursera, Udemy, and Khan Academy offer courses on economics, personal finance, and investing. These courses can help you dive deeper into specific topics and improve your financial skills. Finally, don't forget the importance of reading books about investing. Classics like The Intelligent Investor by Benjamin Graham and Rich Dad Poor Dad by Robert Kiyosaki can give you a solid foundation in financial concepts and investment strategies. Staying informed and educated is key to making smart investment decisions and reaching your financial goals. With the right tools and resources, you can navigate the world of investing with confidence and success. Thanks for joining me on this financial education journey. Until next time, and remember, knowledge is your best investment.